So good afternoon to you. My name is Arabile Kumete. We're live from the Johannesburg Stock Exchange. Welcome then as we unpack the market picture. Let's get straight into it then. It certainly has been a positive touch as well for the Asian market. This is despite what seemed like a mixed trading picture yesterday, with the Asian picture going down but the rest of the world seemingly going higher. Today, back on track is that Asian market today, nearly 2% higher for the Shanghai Composite out in China, as the services sector there grew at a slower pace than it has seen in the last of 10 months or so. Japan services sector also managing to gain somewhat. The Hang Seng out in Hong Kong going up 2.7%, so big gains there, nearly 800 points higher by close of trade, while the Nikkei index out as well, managing to move up 0.5% out in Japan. That positivity has filtered through into the European market picture too, meaning that the FTSE 100 is 0.9% better off and is possibly one of the biggest gainers across that European market picture in this lunchtime trading picture. For now, the DAX is also similarly higher as well. That's 124.7% better off as well for the CAC 40 out in France. The local picture, well, more positivity. We're headed firmly towards that 69,000 point mark and could even reach that figure by the close of trade today. It certainly would be record trading figures, 2/3% better off. Financials 0.9% stronger too, while industrials are the big gainers, moving up more than 1%. Gold and platinum miners are up, but aren't enough to push the resources higher, because the diversified miners seem to be pressing down and unfortunately impacting resources which are weaker. Banks are on the up though. Overall, onto the markets, onto the stocks that are going higher today. Textainer, City Lodge and Steinhoff all going up more than 7%, while Murray and Roberts and African Rainbow Minerals have gone down more than 3% too. Onto the resource front, while Brent crude oil is up 2% and now sits just around that $64 of barrel mark, with platinum and gold sitting down unfortunately today. Bit of a mixed picture across the currency front, but as you can tell, not too much movement out on that front. Michael Traherne from Vestac Asset Management joins us now to unpack this market picture a little bit more. Michael, it's a good afternoon to you. Thank you so much for joining us then on this Wednesday afternoon. This market picture seems to tell us that things are back on track, but if one takes a deeper look, you get to see that the technology stocks are no longer in favor, and we're really cycling back, so to speak, into the stocks that would do well when economies open up. How's that faring?
Yeah, for sure. Stock markets probably for the last month have been rather volatile, not really direction dependent. I mean, you just have a look at this week. Monday was one of the best days in months, and then Tuesday you see the stock market down, and now today you see it up again. And it really shows how investors are not quite sure how to interpret short-term data. How quickly is the market going to open up again? Are we going to have a third wave? Are vaccines effective? Are we going to have enough vaccines? And these are questions that have been asked globally. And obviously South Africa is driven by that. It is good news though that the JSE has probably been an outperformer over the last quarter. And that's good news for everyone who's got pension funds.
Just last week, though, we saw the yields, the bond yields, get into the news story. This week, it seems to have eased off after having that prodigious rise. Are we likely to see something like that happen sort of again? Do you think that the likelihood of inflation worries, plus the aspect of the economies around the world getting back to normal, could again push those yields a little bit higher? Is that something that the markets are worried about again?
Yeah, for sure. I think that's definitely one of the underlying themes at the moment, is when does inflation come back and does it come back? On one hand, you've got deflationary pressure through technology changes, where technology has just made things a lot cheaper to do. But on the other hand, you've got inflationary pressures from all of the central bank money printing, so to speak. And the market's struggling to make up its mind about how quickly inflation will come back. And higher inflation means higher interest rates and generally a lower stock market. And that's why we've seen, as soon as bond yields increase on fears of inflation, you've seen the stock market go backwards. But then the inverse happens a few days later, where bond yields go down, the stock market goes up. So it's definitely a short-term trend. But the jury's still out around where will the market settle on inflation. And I think the best stacked house view is that inflation will probably be lower for longer than people expect.
Yeah, I suppose the next big thing is that $1.9 trillion stimulus package out in the US. But it seems that we're reaping some benefits as well. We're headed towards 69,000 points. We could even close out 70,000 points before the end of this quarter. Where's this positivity coming from?
Yeah, by and large, it's our resource stocks. Having a weak rand last year was brilliant news for them. It meant that costs in rands, revenues in dollars, basically, and it was a huge increase to their profits, and that's why the share price has gone up. And we have a look at African Rainbow Minerals, who came out with their numbers this morning. They saw an extra 130% in profits, and they've doubled their dividend. And that just highlights how well parts of the resource sector has done, and that's what's been pushing higher. And then obviously our old favorite, Naspers and Prosus, have had a very good start to the year so far. Flat over the last month, but that's probably going to pick up again, and that'll be a good tailwind to the overall market levels.
Finally then, Brent crude oil at some point was headed towards $70 a barrel, now still languishing around 64, 65. Is there much that we can read into this? I mean, supply questions around whether we will see later on in a meeting this week by OPEC, whether indeed they will begin to increase supply. Once they do that, I mean, they bring prices lower, don't they?
Yeah, no doubt that the 10 million barrels that OPEC have cut from supply over the last couple of months is a big driver of the increase in the oil price. We're not nearly back at the levels of consumption that we saw pre-COVID, and that's particularly given that we're not flying as much. So as OPEC increases their supply, potentially that puts pressure on prices. But Russia and Saudi Arabia seem to be at loggerheads around how quickly do they open supply, and it seems that the agreement's going to be let's keep prices around $60. And then only increase supply as we're seeing an increase in demand. But OPEC Plus meeting tomorrow, and we should have extra information out. I think for us here in South Africa, obviously a low oil price is much, much better, and it could help in lowering interest rates, which is good for our economy in general. So fingers crossed that we get lower oil prices, but that doesn't seem to be the case for the short term.
Yeah. All right. Well, let's see what happens. Michael, appreciate the time. We're going to have to leave it there. Thank you so much for it. Michael Traherne from Vestac Asset Management joining us as we get a hold of this market picture. Still a whole lot still to come, of course. Even some economic data out here in South Africa for the remainder of this week that we're set to look out for. So do be on the lookout for it. We're going to continue, though, and give you a whole lot more news for the remainder of today.